Hey everyone, welcome to the 10 Line Investor channel. In today's video, we're going to look at two stocks which are looking excellent from an investment perspective. One of them is about to give an 8-year breakout, and it's a very well-known name in the auto ancillary space. And another is also from the auto ancillary space, but it has already given a breakout. It has been consolidating for the last few months and is about to resume a long-term uptrend. Now, both of them have excellent fundamentals. I mean, the first company has taken a hit in the last 8 years, but again, it looks like improving. Another stock also looks excellent from a fundamental perspective. But as always, we can look at first Nifty and what Nifty has to do for the next week, or what Nifty will do for the next week, and then we'll move on to the two stocks. So do stay with me till the end of this video, because those two stocks are very good. Even if you start investing right now, you will make decent returns in the coming months and years. Okay, let's get started. So first thing, Nifty Outlook. Now, Nifty, I've always been bullish on Nifty for the last few months, at least for the last few weeks, if not for the last few months. And I've clearly said that the Nifty chart, actually Nifty price, is reversing from a long-term, trend line. And you can check my past videos for that, and you can see the outlook that I've given. But what we've done in the last week is we have actually broken out. Nifty has actually broken out from a 2.5 months downtrend. Now, if you look here, this was a top that we had in December 1st. And since December 1st, Nifty actually has been going down. And then off late, it has been going sideways. And finally, we broke out last week, Wednesday. And now, this week, Wednesday on the 15th. And now we've retested that breakout also. And now we are probably going to head higher again. Now, from that, looking at that chart, I would definitely not be bearish. If I'm not bullish, I'll definitely not be bearish at least. And for now, looking at the hourly candle reversal that happened on Friday, for me, this is an excellent bet on Nifty to go long with a stop loss around 17,730 levels, 17,850, which is a major support zone, which I think Nifty shouldn't break. And eventually, probably we're going to head higher. Now, a disclaimer here, BankNifty has been looking very weak. Probably some other sector would probably, pitch in something like an auto or FMCG, some other sector might do well and might take Nifty higher, while Bank Nifty consolidates for some more time. So I don't see strength in Bank Nifty, but Nifty definitely is showing strength, and I expect Nifty to head higher from here. So that's my Nifty outlook. Do let me know what you think on Nifty. I'm sure a lot of you have views, especially given that how there's been a lot of bearish news regarding Adani and all of this. But remember, global markets also doing pretty well, and I think we are going to head higher probably in the next few weeks or so. So that's my Nifty take. Now moving on to those two stocks, and the first stock that we're going to discuss today is a very well-known name in the auto space, which is Bosch. Now Bosch actually has been falling since 2015. It has not given any returns for investors, and the stock has seen a major correction. And I feel after 8 years, this stock is now headed to higher levels from now. So this is a short outlook on what Bosch actually looks like. It's a big company. It has 50,000 crore market cap. Definitely a mid-cap company. PE is around 38. Now, historically, the PE has been much higher, but it has fallen since the price has been correcting since quite some time. ROC and ROE look pretty good, and the book value is around 3,600. Current market price is around 18,000 rupees. Now, I'm just going to give you a take on what are the valuations, and are the valuations really comfortable from a valuation perspective. Now, historically, the market cap to sales, basically the overall valuation of the company to the sales that it generates on a yearly basis, it was trading at around 8 to 9 times the market cap, or 8 to 9 times the sales, and today it's trading around 3.8, 3.9 times, around 4 times or so, right? So it has been beaten off severely, the stock, from almost, more, you can say the market cap to sales ratio has fallen more than 50%. But off late, if you see, it has kind of risen again, and it again started correcting off late. Now, what has changed since 2015 is, I'll come to that shortly. But what has changed is we had a dip in the overall sales, but now we are again picking up, and sales is at an all-time high. Now, that's what I wanted to note from a fundamental perspective, that sales is at an all-time high. Now, going into the annual sales, I'm just going to show you some numbers here. So Bosch, this is the sales numbers and top line, bottom line, basically the top line and bottom line since 2010. And if you look, 2015 is when the stock peaked, right? So we had a strong growth, and 12,000 crores was the sales that we had in 2015. And then sales kind of started stagnating, right? We saw almost no growth in sales until the last 12 months, trailing 12 months. So I see that this year, finally, we should be crossing that all-time high sales in financial year 2023. And the problem that I see in Bosch is the margins have kind of taken a beating, and since the COVID lows, we are around the 12% mark. Now my take is that since the stock is kind of trying to break out from a long-term downtrend, and the sales operating margins here has hit probably an all-time low, and this might be it. And from here on, since the sales is improving, the company also has invested in some plans on recently. So overall, I think operational efficiencies should start kicking in, and the stock might do well in terms of, the company might do well in terms of sales and profits. Okay, so that's my take. Do let me know what you think. But take a look at also the profits, right? We have hit an all-time high of 1,500. Here we hit an all-time high profits of net PAT of 1,600 almost, and we have kind of taken a beating. And I feel the stock has corrected enough. The stock has formed probably a good base, and from here on, the stock might do well. So given that, that's my fundamental view. Now, having said that, let's take a look at the technicals itself here. So technicals, I have the weekly charts in front of me. Now, as always, I say weekly charts is what gives you a clear trend of the overall stock price trend. And here I also have a CCA and relative strength plotted. So how did the stock come in my scanner? Stock came in my scanner this week when CCI crossed 100 on the weekly charts. CCI is around 150 levels, which is very bullish for me. And also look at that resistance there. Now this is a 3.5 year accumulation base that we have seen since 2019 or so. The stock has been forming a beautiful consolidation around the zone over here. Now volumes also have risen this week, and the stock is showing relative strength, good relative strength this week as well. So I'm not sure if you can see the green line over here, but the stock relative strength is above the 52-week moving average, and that's why I'm seeing also some good performance from the stock, and that's why I'm recommending the stock. So overall, the stock looks very good. Volumes also have risen since this week, and if you look overall since COVID, the volumes have been very good as well, which means overall the stock, people find the stock, or at least the big institutions find the stock valuated very well or kind of undervalued, and they are kind of accumulating stock since the COVID lows. So that's the weekly charts. Now zooming into the daily charts to show you what's happening around the zone. If you see, you had a tight consolidation around the zone, and also I looked at the ATR. I'm not showing it here, but the average true range is at an all-time low since the last 8 years. So moving on to the daily charts here. On the daily charts, we've had a clean breakout from this multiple significant trend line, and also if you see here, we had a nice cup and handle pattern here, and we kind of made a bottom, I think, in terms of technicals, and volumes also have been rising in the last few days. So overall, I think it's a very good time to invest in Bosch. Now you can go and buy the stock in two ways. One is either you do a SIP in the stock with a stop loss probably around that zone, or you can buy the stock, a good 5% of your portfolio, and then add as and when the stock goes higher. Now, if we kind of break out above that zone, which I marked here, and if we sustain on a weekly closing basis around this zone, then definitely a long-term uptrend is going to start in the stock, and we might see all-time high soon. So I would buy the stock at current market price, which is around 18,000 odd levels, keeping a stop loss around 9 to 10%. I'm going to look for targets of 25,000 from a positional trading perspective. But if you're investing, you can look for targets for much higher levels. We might see much higher levels in the next 3 to 5 years. And it might be a very good investment bet from the auto ancillary space, given that it's also a very good brand in the auto space. So that's the first stock. The second stock also is from the auto ancillary space, which is Suprajit Engineering. Now, fundamentally, this stock has been doing already very well, and it has already broken out. And if you look at the numbers here, in the last 10 years, the stock has gone up from 350 crore sales to almost 2,500 crore sales. Well, there's a phenomenal jump in the overall sales. The margins have taken beating in the last few years. It's come down from almost 17% to 14%. And also, if you look at the overall PAT, we have almost hitting an all-time high because of the sales. But overall, the margins, I think, have made a bottom also here, probably, given that the stock has been doing very well, or probably the stock is doing well because of the sales hitting all-time high. Keeping that aside, I think overall ROC is very good, 15 to 16%. I think it's similar to Bosch. Also the PE is similar to Bosch, but this is a small cap company, and this might do very well going forward. It could be one of the score stocks in your portfolio. Also, you could do a SIP if you want, but I would not recommend SIPs in small cap stocks because of the volatility, but definitely worth considering to be part of your core portfolio. So taking a look at the weekly chart, so the first breakout happened somewhere in 2021, March, April. That's when we had the breakout. It was kind of a cup, or you can call it a nice rounding bottom pattern here, keeping the patterns aside. But we had a breakout here somewhere in April, Jan 2021. And since then we've gone up, and then we went and consolidated for the last 1 year or so. So since 2020 October, we have been consolidating, and it's a beautiful consolidation for the last 1 year. And if you see, this is a nice rectangle consolidation over here. And I think we have made a bottom, given that we are seeing that CCI is very bullish. Relative strength also is very bullish, and I think we might head higher once 365 is crossed. Now remember, weekly candle has been good after many weeks. Now since last year, June, July, if you look at the weekly charts, for the first time we have very strong weekly candle, right? And we've seen some nice 3 week green candles on the weekly charts, and volumes also have risen slightly. So that's the weekly chart view. And looking at the daily chart, if you see here, we've had nice rectangle consolidation. We had a breakout here, but now a major breakout would be above this rectangle consolidation over here, right? And we've been going sideways. And I think once we close above that 365 zone on a daily charts, on a daily basis, I think we'll do very well in the stock. So we're going to buy the stock at 360 rupees. Keep a stop loss of 11 to 12%. I'm going to look for targets of 470 or even much higher if you're willing to hold for a long term, from a long term perspective. Now, whatever you do, if you're holding for a long term perspective, and if in weekly charts CCI goes below -100, do get out of the stock, because the stock would probably be starting a downtrend if CCI goes below -100. So from an investment perspective, always follow the trend. Don't hold on to stocks once a downtrend starts. So these are the 2 stocks. Do let me know what you think of my analysis, and don't forget to subscribe to my channel, and don't forget to like this video as well. Otherwise, I'm going to leave you here, and I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye bye.